So there is an awful lot of chaos in China right now. They've had a pretty poor start to 2022 and they had a pretty poor 2021 as well that was plagued with a bunch of different issues like government-led Communist Party tech crackdowns on some of the most popular and most successful Chinese companies to ever exist. We had government-led Communist Party crackdowns on Hong Kong, one of the most successful cities in the world. We've had crackdowns on Uyghur Muslims and minorities over in the west of the country in Xinjiang, and we've had COVID crackdowns as well. Basically, there's been no respite for China. They've been having an awful lot of problems, and that doesn't seem like it's about to end today. So what is the news that we're here to actually talk about today regarding China and this chaos? Well, there are a few things. The first is that there are rumors and there's a probable chance that actually China's about to start entering into lockdowns once more. This is going to impact productive capacity of the country. There are going to be supply side shocks that ripple all over the world if this actually happens. And then finally, we have another billion-dollar real estate failure in China, which isn't exactly news anymore, but is still bad. So if we start off with the COVID problem. Now, the Yangtze Delta is this massive populated area in China. It includes cities like Shanghai, Nanjing, Hangzhou, basically 10 to 20 million person cities. There's probably 100, 150 million people in that area itself. And there has been a growing COVID flare-up problem there. And so it's predicted that lockdowns are going to start coming into these cities, and that's going to impact the country and the rest of the world as well. As of right now, the news is that two separate counties in this area have been fully locked down after they saw cases rising in the areas. And then there are also rising numbers of cases in the major cities surrounding these counties as well, like in Shanghai. And that's very worrying because it means that actually with the way the CCP is treating COVID still, with their claim to be targeting a zero COVID policy, well, the only way for them to target that is to lock these areas down. Now, of course, Xi Jinping says that all is fine, that everything's going to plan, and that actually these lockdowns aren't a problem because it's acceptable to lock these people down, to take away their freedoms and to disrupt the economy to this extent if it means that COVID doesn't take hold and it doesn't impact the rest of the country. The problem is, though, when does this policy end? We know that we cannot get rid of COVID. We know that vaccines will not get rid of COVID. We can't make people fully immune to it, so it will continue spreading and continue evolving as a virus, and it's never really going to end. And so if you target a zero COVID policy like this, well then you're never really going to stop seeing lockdowns. You're going to maintain yourself in this state of perpetual fear forever and ever. And in my opinion, that's just an impossibly naive thing to do. And frankly, most people know it these days. Now, there is a rumor going around that actually the Communist Party of China knows this as well, and they might actually be starting to make a change, not in their outright stance, but in the actual policies that they put into place. And for that, I have this short clip here from CNBC for you.
We were talking about, hopeful signs of recovery in China, although, we were still mentioning that within China, the travel restrictions there were still some fairly strict policies going on. But, it just brings us back to that same old thing, doesn't it, Stephen? Even though economically and financially in the markets, China's looking reasonably attractive, it's all being held hostage by this COVID situation still, isn't it?
I think, China has materially changed the practice in terms of, the zero COVID policy without really changing the headline zero COVID policy. As a matter of fact, even for the city of Shanghai, we have seen material sign of, growth recovery. That being said, I think, what's moving the market is actually the change of sentiment, change of, liquidity. 2 months ago, everyone was still thinking China is uninvestable. And now the fear is actually, missing out the China rally, China rebound. So compared
Yeah,
to...
okay. I mean, sorry, Stephen, I get that. I mean, like I say, most of the analysts that we talk to are fundamentally bullish on the underlying China story. But, you're saying here that there's been a change in the COVID policy. Tell me what change you're seeing.
Let me give you one quick example. In the province of Jiangsu, which is one of the most affluent provinces in China, even by as late as the end of May, there are over 337 checking points for COVID testing. And as of today, there's only 2. So that's one example of which, and not to
So,
mention that, in my
so
view, I
you're
think,
suggesting that
going
they've
forward,
abandoned the zero COVID commitment?
yeah, that's the so-called Chinese wisdom, right? Changing the substance of the policy without changing the name of the policy. At the end of the day, we have seen, going forward, increasingly, it's almost impossible for any city to declare lockdown, to easily have a mass testing of COVID, because number one, the central government is cutting off the fund. Number two, the National Health Commission is also basically said you cannot have the healthcare, medical funds for testing. And in the meantime, local fiscal revenue has declined significantly. So essentially, the reality has forced a change of implementation in terms of how China is fighting COVID. It's very clear they have shifted the priority. The number one priority is stimulating the economy, is to get the economy as going. So I think that's a fundamental change.
So the idea being pushed here is that China and the Communist Party, well, they want to save face by still claiming to target this zero COVID policy because they've made it a big part of their nation at this point, of claiming that this is what the good and right thing to do is. But secretly, they know that it's a lost cause. And so they want to just slowly get the population to ignore COVID and to move on from this. Now, the Communist Party is still denying these claims. HSBC here seem to think the opposite is happening, that this is the start of the end of zero COVID for China, and that the Communist Party is just saving face. We just have to wait and see what the policies that the Communist Party put into place are if we actually want to find out what's really going to happen next. Now, why is this important for us to talk about today? Why is zero COVID such an important policy for China to have in place? Well, it's very simple. Lockdowns stop the economy from moving, and China is an incredibly productive economy that exports to everywhere in the world. Major productive parts of the Chinese economy will be shut down if a lockdown goes into place, and that will have wide-ranging consequences. Factories will be locked down, people will not be able to work, and this will impact the supply-side crisis that is already present all around the world. Volvo have now officially come out and said that actually the lockdowns over the last quarter were so impactful that it's going to impact their third quarter sales. And then, of course, if these lockdowns continue into the future, it's going to continue to impact Volvo as well. The interesting thing here, though, is that with Volvo, they're not talking about direct production of vehicles that are being impacted. They're talking about component parts not being created in China and not shipped over in time. And so Volvo can't physically get the final product of these vehicles out of the door. This is, of course, relating to the chip shortages, which has been a massive narrative for about 2.5 years now. And that chip shortage narrative isn't going to go away anytime soon. Tesla is another great example of this. We had their second quarter results come out the other day, and in short, it wasn't brilliant. They actually had fewer deliveries than the month before, the first time they missed that in about 2 years. And a big part of the reason why Tesla had fewer deliveries than usual is because their Chinese factory wasn't operating for a large amount of time, despite the fact that Elon was over in China speaking with Communist Party officials, trying with all his might to get the factories open. What this means for us outside of China, for those of us who don't have a business in China, I don't personally run a manufacturing company that works in China. I doubt you do either. This is still going to impact us, though, for obvious reasons, though. Supply side shocks are continuing to ripple through our economy, and so we're going to continue to see shortages in a number of different things, and the supply side crisis is not going to ease anytime soon if these lockdowns keep being put into place, which it seems likely they are. This is also going to impact inflation then, and it's going to maintain at high inflation levels because it's going to limit supply. And the only way we're going to see this not happen is if demand is absolutely cratered as we enter a recession and federal banks start to make serious impacts regarding quantitative tightening and interest rate hikes. This means there's probably going to be more Federal Reserve interest rate hikes, more for the European Central Bank, for the Bank of England, for other central banks as well, more quantitative tightening, and this in short is bad for markets. So this news that actually lockdowns might continue into China into the foreseeable future will impact your investments, it will impact your portfolio, even if you have no explicit exposure to that country itself. What else is actually new in China, and where else does this chaos happen? Well, of course, it's in the real estate sector, the absolutely awful real estate sector of China, which has been on the brink of collapse for almost a year now at this point, and that's continuing as well. Now, Shimao, a massive multi-billion-dollar Shanghai-based property developer, defaulted last year on some bonds. They didn't have the money to pay off their debts. They had billions in debt, and so that was a major problem. And we've just seen them default again, this time on a $1 billion bond that they failed to pay the interest or the principal of. And on top of that, there are billions more in payments due for the future. So this is obviously bad news. Now, of course, this isn't the only company having this problem. We've seen the exact same thing happen with Evergrande, with Fantasia, with Kaiser, and 100 other property developers as well, which are all about to fall as well. Now, this is all based on the property bubble in China because prices are falling. Developers are carrying huge amounts of debt that they can't pay off because they aren't able to even make a profit on their construction projects anymore because there's just no demand for these properties. Now, the CCP does seem to be doing absolutely everything it can to slow down this collapse and to stop it from really taking the entire country with it. And so far, they've actually been doing a relatively successful job. They've done a number of things in particular, though. As you can see here, they have stepped up efforts to revive home sales by lowering mortgage rates and easing rules on home purchases. And then here's the really ridiculous things. Some developers have come up with imaginative ways to spur sales, from accepting grain or garlic as down payments to offering pigs as an incentive to buyers. Now, if that doesn't send alarm bells ringing in your mind, then I really don't know what does. The idea that you can buy a property with garlic or grain as opposed to cash is absolutely absurd, and it shows just how desperate some of these developers are to get rid of this inventory and to just get something on their balance sheet so that they can then try and sell these weird commodities that they're taking in exchange for property, and then they can hopefully pay off some of their debts. Now, where's this going to go into the future? Well, house prices in China are still down, and that's especially the case for brand new properties which have only just been built. They're still falling as well, and there doesn't really seem to be an easy way out here. It's either going to be Communist Party government bailouts or a total market collapse for this entire industry. Now, so far, we have seen this slow, silent government bailout system, and it seems that that's likely to continue into the future. This is mostly done in secret. The Communist Party doesn't want to be seen to helping these companies because, frankly, they were irresponsible capitalists, and the Communist Party is a communist party, and they like to make a stand against this, but they're well aware that if they let these companies collapse, then the entire real estate sector will collapse with them. So what's my prediction of what's going to happen here? Well, frankly, I think this situation is going to last for 2 or 3 more years. And at the end of it all, the CCP, the Communist Party, is going to own or control almost every property developer in the entire country. We're going to see the effective nationalization of construction in China. We've already seen this with certain companies, with the CCP taking control of them, taking control of their assets and their bonds and their projects, and just eating the losses so that it doesn't reflect back onto their investors. Now, foreign investors that are involved in this industry will be left to go bankrupt for the most part. Chinese investors will mostly be bailed out, and this might sound like it's an okay situation in the end, but in reality, this would represent the start of the end of capitalism in China, something that actually we've already started to see over recent years with the tech company crackdowns, and in the long run, that will drastically hurt China's growth because there will be no foreign investment into the country if China is so eager to let foreign investors get burned and to nationalize industries when things don't quite go to plan. It's for this reason, and actually many others as well, that I think that China is still not a safe investment right now. It wasn't over the last year, and it's not going to be into the future either. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to iTrust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join iTrust Capital. Thank you all for watching. Stay stoic. Until next time.